Chief of Staff of the Department of Defense and FBI Director.
Okay. Welcome back, everybody. FOMC meeting. It's going to be in about 40 minutes. The rate decision comes out in about 10 minutes. So let's just kind of go through what we're expecting here. We're expecting a 25 basis point rate cut. So this is the first rate cut of the year. We were promised, at first they were rumoring 3 rate cuts this year. Then they kind of tapered it back down to 2. And so we've already been expecting 2 rate cuts. And so this is going to be the first. I think the market's been selling off in anticipation of the rate cut because probably the last 2-3 months have just been extremely bullish. I think that was the market being forward-looking, knowing we're going to get a rate cut, and just sort of getting, the institutions were buying early, getting ahead. It right now is cooling off. It's coming down for a retracement, and then it will continue bullish, in my opinion. So more than likely, we continue dropping today, and then maybe tomorrow or early next week, we start the recovery back up. Now, based on how aggressive the market's been, how volatile it's been, there's a chance that we see the recovery today. It's an immediate kind of recovery. And I think it kind of crushes a lot of people out of their buys, continues to drop, and then maybe tomorrow or next week, we see a massive recovery. All right. Does that make sense? So just to go through the Fed futures market, I'm here on the CME Fed Watch tool. And if we look at the probabilities, there's about a 96% chance that we get the rate cut today. And there's only about a 75% chance that we get the rate cut we get another rate cut in October. Sorry to the members, I misspoke. I said November. Third rate cut in December. Now, 70%, 75%, that's not really, that's not really as accurate as I'd like it to be. But in the 90s range, we're almost guaranteed to have a rate cut in about 8 minutes once the news drops. So I have the press conference here from the Fed. Oh, if I can find it right here. And so as soon as it starts, we'll go live. For now, I'm going to be listening to Kash Patel, who I'm pretty sure is in front of the House Oversight Committee, if I'm not mistaken. He was in front of the Senate yesterday, completely embarrassed himself in this nation. And so we're ideally, I mean, look, I've been watching this for like about an hour, and this guy sucks. I'm just going to say, Kash Patel sucks. The whole time he's just dick riding the men and women of the FBI in disrespect. They're asking him straightforward questions. Have you looked at this information? Have you spoken to the victims of the Epstein case? And the whole time he's like, why would I talk to them? Why would I do that? Listen to this shit for yourself. All right. And then as soon as the press conference starts, we'll kind of shift back over. Before I allow Kash Patel to continue embarrassing this great nation, let me just go through the charts real quick, kind of give you guys a rundown of what I'm seeing. Members, this ain't rocket surgery. Okay. You guys see exactly what I'm seeing here. If we really kind of want to get, that's not good enough for me. So I had to draw the fibs in a few different ways just to get it to line up with price action. And I think this is kind of the best angle I've found. I drew it from the body of this low. So we have this area of consolidation here before we had this impulse. And then now we have a higher low retrace, we have a higher low after this retracement. So we've already formed a small floor at the 78.6 Fibonacci retracement. I personally am waiting for the market to come down to this 24,100 mark. This is on Pepperstone here, but I'm looking for it to come down to this 88 fib, buy it up. To be honest, I'm very likely staying out of the markets today. I think I'm already mentally preparing myself for the fact this thing could just fly without me, and I'm gonna have to watch this happen while on the stream. But I think that the risk of entering these buys is I don't know, it's for me personally, it's just not worth it. If you do want to get in, small risk, make sure that you guys are being responsible. And yeah, so it's another trading day. because we always say it's like the only three options that will be in your results, or that should be in your results as a disciplined trader, is having a small loss, small win, or big win. If you're controlling the size of your losses, then today's just another day. If you lose, it's no big deal. But if you win, then today could be one of those big wins. You don't have to over leverage because the market is so volatile around news days that you'll make money. It's going to push aggressively and you'll be able to make money without having to over leverage. So keep that as a reminder, keep your risk in check, and then, nobody can tell you don't trade news days or whatever, except your broker or profit, right? They can definitely tell you that you can't trade news. Cool. All right, let's listen to Cash Patel embarrassing himself and us on the global stage. Global meaning C-SPAN. Well, this is actually on Fox. We got Senate hearings on Fox now, people. This is wild. This is how you know that this is a big story. This used to be relegated to C-SPAN. I don't know if you guys know what C-SPAN is, but if you do, congratulations. I got nothing. All right, let's go. Let's run this up.
Object.
And I've got three more.
All right. Am I going to
Last.
speak over this deliberately? Because the last thing I want to hear is Jasmine Crockett saying anything at all, any words. Oh my God. This used to be me, by the way, guys. I used to work up there in Congress, and they would just like send me like, "Oh, staffer, just get up there and take notes in the back." And I'd just be there one meeting after the other. Stupid questions. Everybody's trying to get their 15 seconds of fame. All right. We got 4 minutes until the news drops. Of course, I'm going to keep you guys posted. There will be an immediate reaction right at 2 p.m. because naturally there's a 2 p.m. pump almost every day. So you kind of see that hourly candle closure. There's usually a massive liquidity push around that 2 p.m. mark. Right now, it's going to be accented by the fact that the rate decision is going to release right at that time. So if you guys are expecting some kind of like very clean setup or something like that, be mindful this thing is going to get pretty aggressive in one direction or the other. So risk management is king. All right. Make me proud, y'all.
At your confirmation hearing in January, you said under oath, and I quote, "There will be no politicization at the FBI. There will be no..."
How are you a member of the House and you can't say the word politicization? That's your fucking job.
"By the FBI, should I be confirmed?" And in your written response to the Senate questionnaire, you said, I quote, "Personnel..."
Also, last thing for the members, I got Jacob here right next to me. All right. If we win this trade, I'll take full credit. If we lose, you guys know who to blame. All right. All right. Just throwing that out there. I'm going to look to him for guidance here. If we fuck this up, go for his neck. All right. Do not let him off the hook. He said just don't miss.
Decisions
I like
shall be
that.
based on performance and
That's crazy.
adherence to the law. And every FBI employee will be held to the absolute same standard, and no one will be terminated or case assignments. So I want to just go through a couple of scenarios with you to get a sense of whether you think these are examples of politicization of the
Oh my God.
FBI.
Did she
or
do it
making
again?
Decisions based on the
Bro, her staff sucks. They really wrote those questions for her knowing she can't pronounce words. That's so fucked up. They're like, yo, she really can't say these words. Let's just throw it in the questions 4 times. Lord have mercy, or fire somebody. Someone needs to get fired today.
performance
Ideally, the senator, whoever the fuck she is.
and adherence to the law. So, first question. Would hiring FBI agents, analysts, and supervisors
All right, we have about 48 seconds. 48 seconds until the rate decision. All right, it's going to release here on the Fed's website. We have January, May, June, July, August, September. Yep, still waiting for the release. Forex Factory said about 30 seconds left, so we're almost there. Let's see the instant reaction here on the charts. We really might get a bullish engulfing candle that just pops straight up because I think there might still be like a little bit of skepticism. Will they actually cut rates? Are we finally get one? And this is going to signal like this is a new direction we're headed now. Now we're headed to cut. Like I know it's not going to happen right away. We're not going to have back-to-back 50 basis point cuts, but This is the start of a new era where we are now back in the rate cutting cycle. I think people are going to get so excited and get ahead of buying the stock market if we actually get this decision. All right, yeah, they cut 25 basis points, and we're getting that pump. We're getting that pump now. All right. So let's see if we get a push back down to the 88 fib, and then we're able to take a potential buy position. So let's see what the Fed says here in terms. So we get it. They want to cut rates. The committee's strongly committed to supporting max employment and returning inflation to 2%. Okay. Effective September 18th. Let's see what we got. Conducting standard overnight repos operations with a minimum bid of 4.25 with an aggregated operating limit of 500 billion. Okay, reverse repos at an offer rate of 4%, counterparty limit of 160, rollover treasuries, and then MBS cap at 35 billion. So long story short, this is all stimulation for the economy. So when you cut the rates, you allow banks to use more of their money, you allow financial institutions to have more access to borrowing money from the Fed, which is what's happening with some of the limits that they've increased. The ability for the Fed to do more market operations, open market operations, like buying assets from the open market and pumping them up. And so this is all bullish for the stock market, specifically for NASDAQ, because risk assets like crypto and the tech stocks respond mostly to Fed policy, and more specifically to money, total money liquidity, capital flow. So if there's money moving around the system, if money is more accessible, and if the interest rate is lower, then the stock market should be popping off. All right. Now, keep in mind, this is a bigger, higher time frame sort of move. That's like, this is part of the overall larger trend. And so you might see something different today specifically, but this is going to be the direction the market goes based on this decision here, because this is overall bullish.
Investigation into the Russian interference in the 2016 presidential election and helped in.
I'm going to cry if this thing really pops off. Actually, no emotions. I'm cold, dead inside, but I'll shed a tear. It's involuntary. I don't know, right? If you guys hear me weeping in the background, mind your business, okay? Okay. We have about half an hour before Jerome Powell hits the stage. So this thing is probably going to wrap up. We'll probably wrap up the stream after the Q&A session. I'm expecting the Q&A session to be very interesting this time around. This is the first rate cut we've had since, what is it, 2021? Because 2021 we cut rates. 2022, we reached 9% inflation, and then we ended up starting raising rates and the quantitative tightening cycle. And then basically once they raised the rates to 5%, we've kind of been stuck there for a while. Now I think we had 2 rate cuts last year. Actually, let me not say 2021. I think we had 2 rate cuts last year, right? Yeah, we went from 5% down to 4.5, right? So we had 2 rate cuts at 25 basis points each. And then this time around, this is the first one we've had in a year, right? And so the two sides of the argument, just so you guys kind of have an understanding of this, Jerome Powell doesn't want to cut rates too aggressively because that will lead to inflation. They're scared about it causing an asset bubble because prices are just going to go ballistic, which is true, let's be honest. And then just really inflation is the #1 priority, because if there's more money sloshing around and people are getting paid more, or people have more money because of their assets, they're going to spend more money. They're going to be willing to pay more for certain things like vacations and trips, or just consumer goods in general. And that's going to bid the price of those things higher and higher. And so that's going to cause inflation because people have more money to spend. here if we cut the interest rate by 1%. So for every 1% we cut, we're saving $300 billion. We cut it 2%, so we bring the marginal rate down to like 3.5, or sorry, 2.5. My bad. Then we'll be saving $600 billion this year in expenses, which is absolutely nuts, right? But the reality is that's going to cause inflation, which is way worse. And so that's kind of the push and pull. Trump is calling Powell, too late, Jerome, which he is going to be too late, but I think that's honestly better than being too early. Let's be real. I don't think it's appropriate for Jerome Powell, because he's going to mention this during his speech, to wait for the unemployment numbers to start looking bad before he really gets into the rate cutting cycle. We looked at this the other day, and I can actually show you guys this real quick. So if I go to the Federal Reserve of St. Louis website, the Federal Reserve Economic Data website here, and I look at unemployment, which I think is the one I clicked on, that's CPI. What I need is unemployment data. Here it is. Look at the unemployment rate. Now, when you guys are looking at this chart, these gray bands here, they represent take a look just like in recent kind of memory here. If we look at the 89 recession, the market was looking pretty good. We had a recession, and then we didn't really reach the peak until about after the recession ended. So once the recession was over, which was like about 2 years, the unemployment rate was still going up. Let's look at the 2001 crisis. So like while the recession was happening, the more, the unemployment rate is rising. It didn't hit its peak until after, like a year after the actual crisis. The 08 financial crisis, once it's finished in 09, the market didn't peak out. The unemployment rate didn't peak out till 2010. It didn't really start coming all the way down for probably like 7-8 years is what it took. This was COVID, so that's kind of an externality. And then look at this, we're right back at all-time lows. All right, so whenever the market is at these all-time lows right here, typically a recession comes next. Agreed? Whenever the market gets to the low, we're talking about the unemployment rate here. Whenever this chart gets to the absolute low, then we see a recession probably 1 year after. And that's kind of where we're at now. So we might be expecting a recession here. Or if the Fed cuts rates preemptively like they're doing now and they're going to keep doing, then we might actually avoid a recession or push it off until after Trump. All right, so you guys understand where we're at here? Jerome Powell waiting for the unemployment rate is a bad idea, because by the time that the unemployment rate cracks, it'll be too late.
Investigate Trump's ally, Peter Navarro. Director Patel, it is very clear that you have flunked your own test. You put saving your job, which I actually believe you were being honest about during your confirmation hearing, over doing what's right for the FBI and the American people.
One of those.
That is not adherence to the law. Thank you, and I yield back.
Time of the gentlelady is expired. The chair now recognizes the gentleman from North Carolina.
Thank you, Mr. Chairman. Director Patel, it's great to have this opportunity. Thank you for being here. Thank you for your service. And I've got to say, one of the most disheartening components of the previous administration, when I was working with local law enforcement all over the state of North Carolina, all over the country, people rightfully did not really care about the inner workings of Washington, D.C. The FBI had previously been the paramount, the sterling, the top of the top law enforcement agency. They wanted their FBI to fight crime. Whatever small town, city, whatever it may be, FBI was expected to deliver for the American people. And then reports started to come out, in addition to the likes of McCabe, Comey, Clapper, Strzok, Page, that the FBI was targeting Christian nonprofits. They were targeting parents for protesting radical gender theory at their schools. They targeted Catholics, churches, pro-life organizations. And the FBI was really bruised in just modern day America. Your focus on getting the FBI back to the streets, fighting criminals, locking up bad guys, whether they're violent criminals, whether they're sex predators, whatever they may be, that is restoring the reputation of the FBI, and I thank you for that. In regards to the perceptions, I want to be very clear here. You mentioned the statistics about removing dangerous illegals, removing thousands of kilograms of drugs, violent criminals, guns. The border is secure. These accomplishments are noteworthy and they're needed. But at the same token, I want your take. The fight is not over. Isn't that correct? When we look at what happened in the previous administration, the number of illegal alien criminals that made their way into this country of every type, they're embedded, they're here, and it's going to take a sustained effort to win this battle.
That's the critical component, sustained effort. And that's the critical component when you look at what happened in Washington, D.C. We're not here for 4 seconds in terms of safeguarding Washington, D.C. It's a sustained initiative. We're taking it to Memphis and wherever we decide else. And so we are going to continue the mission till it's done.
In regards to offloading some of the agents from Washington, D.C. to the states, to the people, can you just explain how tactically that is a force multiplier in the law enforcement community around the country?
It's pretty simple. You don't even have to be in law enforcement to know that. If you put cops with other cops, they're going to do cop work.
That's right.
And what was needed in the communities out there was more cops. What was not needed in the bloated bureaucracy of Washington, D.C. was a third of the FBI's workforce, because a third of the crime does not happen in the Washington, D.C. NCR area. And so the results speak for themselves. Our state and local partners, I've always said this, are our biggest ally, our
Yes.
greatest ally and partner. We cannot do the work without them, but we got to send our guys to them.
That's right. And in regards to the last 4 years, the open border policies, whether it's terrorism, drug trafficking, human trafficking, violent crime, massive amounts of organized retail theft, and other types of criminal behavior, can you describe, just so anyone who's listening here can talk about, how serious the levels of criminality have become in the United States?
Well, unfortunately, in order to have these record-breaking numbers of arrests and seizures, you tragically record-breaking explosion in violent crime, and it doesn't happen overnight. And it came in from all corners of the earth and from all platforms, including social media. And that's the root cause of all of these evils. And it
Guys, do not take signal advice from random people in the YouTube chat. Please, for God's sakes, don't make me have to say that out loud. But I feel like I should. Right? You get somebody who, you know what I'm saying, just sell gold, sell gold. Bro, how about you sell gold? You get what I'm trying to say? And let everybody else trade your plan. Whatever you guys do, you better not just get influenced into doing something stupid because you read a YouTube live comment, for fuck's sake. Excuse my language. All right. Mandy, yes, December 2nd, official dates for the summit. We're sending out mass emails here very soon. Yeah, and if you guys take a trade that's, just a random person who's just saying, sell this, sell that, do that, off of a live stream YouTube comment section, I don't even know if should I be, I can't even be rude, bro. It's not even worth it. Should I? It's not even rude, bro. It's honest. You probably deserve to lose the money. All right, I'm done. No, wait, no, yeah, I'm done. I mean, but honesty is key. Like, this game is fucked up. This game is really tough, and it will really push you to your absolute limit psychologically and spiritually, mentally. And so the easiest thing to do is kind of keep your head on straight. Every once in a while, get a reminder to stick to the plan, be disciplined. And that's your only job. Your job is to think about one trade at a time and make it through today. And if you guys do that and you do it consistently, you're going to lift your head out the water and be successful. You're going to have money. Will it be a good afternoon or hello, everyone? I don't even know. It's always a good afternoon when you choose that it's a good afternoon. We got a 25 basis point cut. Yes, we did, just as expected, and we're likely to see. There it is. We're getting a short-term reaction here. I think that the market, like, personally, I'm not like itching to buy this thing. I would much rather actually see a rejection and then potentially catch a retest. And so as of right now, I'm not in any trades. I'm going to be waiting till probably after the press conference to look for some orders or to look for some potential opportunities. And then obviously tomorrow and the days after and next week, we're going to have tons of opportunities to trade with whatever the real trend is. So we're getting to some potential short-term buy areas, but personally, guys, I am not in any trades and will likely not enter a trade unless I see something irresistible. All right? Got it? So let's get back listening to Kash Patel lying to our faces before we allow Jerome Powell to hit the stage. Yes, I said we. we will allow Jerome Powell?
Personnel, FBI personnel that have been reported to now be working on immigration enforcement.
Couldn't have signed off on it because it's not happening.
That's right.
You can call it
I'm telling you, like,
whatever you
don't try to catch
want,
the knife as
but
it's falling.
the reality
Do
is
like
that over
this.
2,000 personnel
Be smart. You see that? There's a
individuals are now
little
working
decision, little discretionary choice there.
instead of their
The
jobs.
difference
I
between
want to follow up on
jumping
something
in
that Senator
and not.
Durbin asked you about yesterday.
Yesterday.
This article from MSNBC reports that nearly every
This thing could
agent
fly.
on
Probably will still
Baltimore's
fly.
domestic terrorism
Don't
unit,
see-
who was, by the
It was like
way,
a choice to get in.
investigating the
And
764
I'm choosing not
network
to,
of
knowing that
child
this thing could fly.
predators, was
I
diverted
accept
to
that.
work on immigration enforcement full-time. That forced them to, and I quote him, walk away from investigations of a network of violent predators that targets and exploits children.
You guys ever notice Cash Patel has always got the sniffles? I don't know. I don't know. Something a little weird. He's got allergies.
Premise is false. The 764 network in Baltimore is taken down, and agents do double and triple duty all the time.
I'm reclaiming my time. You told Senator Durbin yesterday you didn't know about it, so your testimony is inconsistent today.
No, I found
Final
out.
question. Let me ask you, again, a yes or no question. Are you aware that agents have been told by supervisors not to document
Walter's in here talking about some
their
cell phone.
shifting of resources toward immigration related?
Walter, mind your business, bro.
That's a
If you're
literal
sending the signal,
falsehood.
maybe I'll take it.
Impossible to move a human being without documenting that work.
As FBI director, you must be transparent with Congress. You need to provide us information about how many agents have been diverted to non-criminal immigration enforcement, why the Baltimore unit was dismantled, and whether there's a cover-up of what's happening under your leadership. Because this goes to the heart of whether or not you're carrying out the stated mission of the FBI, keeping our communities safe. Diverting FBI agents from investigating violent child predators doesn't make us safer. Using FBI resources to target parents, children, and other immigrants for low-level, non-criminal enforcement doesn't make us safer. Enabling violent, lawless conduct by federal enforcement doesn't make us safer. As we saw last week when an ICE officer killed one of my constituents. And I know that the FBI has been involved in that investigation. And yesterday, ICE did a raid in the suburb of Elgin where 2 US citizens were arrested. And who accompanied them on that filming of that show? Secretary Nunn. Shameful conduct. And weaponizing the FBI to serve Donald Trump's political agenda instead of the American people does not make us safer. Before I yield back, Mr. Chairman, I request unanimous consent to submit the following documents for the record. A report from the Cato Institute, which I referenced earlier, where ICE has diverted over 2,500 officers from their jobs. And two, an article from MS.
Not 100% sure, but I think the Cato Institute might be a USAID cutout, aka CIA cutout. Just throwing that out there.
NBC titled Trump's Deportations Divert FBI Agents Off Child Predator Cases, and an article from CNN entitled White House Pressure for Increased Immigration Arrests Strains Law Enforcement Agencies. Thank you, and I yield back.
Gentleman yields back. Without objection, the gentleman yields back. Gentleman from Wisconsin is recognized.
Thank you, and thank you, by the way, for coming over here. Sorry you have to put up with all this. I
He actually doesn't have a choice. It's called a subpoena.
know when you took over, the
And
FBI,
providing accountability to the U.S. people is his job. Oh, let's give him credit for doing the bare minimum.
his reputation.
Oh, thanks for making it all the way down here to lie to our faces and not answer questions. How gracious of you. Thank you for gracing us with your presence. So you can literally sit here and not answer any of the questions. How lucky are we? Right? How blessed are we right now to be sitting in front of his presence? Be honored. All right.
A lot of circles, perhaps had never been lower. I mean, part of that is brazen involvement in political activity, the Foreign Influence Task Force, getting involved and trying to suppress news stories in the New York Post, Crossfire Hurricane coming up with bogus stories to try to flip the 2016 election, FBI downplaying the stories of Hillary Clinton's emails in the 2016 election. That's their overt involvement in political activity. I think a strong anti-religious bias. We talked about stories of an anti-Catholic bias in there. I know I've talked to people about horrific overreaction at the big Hindu temple in New Jersey, in which, just so people understand, you had a rectory in kind of in the temple area. The religious leaders, taken out at gunpoint, big problems. And I think finally the FBI trying to turn America's viewpoint on certain political issues. And when I talk about that, I'm talking about what was done in Mexico with regard to shipping weapons, fast and furious, shipping weapons into Mexico in an effort, I think, to try to turn the Americans against the First Amendment. But in any event, what scares me is, and all these horrible things.
Hold on, that was a big accusation. Because obviously we know that we're gun running drugs down to or we're gun running guns down to the cartels. But just kind of putting that, he said Fast and Furious style, and kind of just throwing that in the middle of his soliloquy. That's kind of crazy. It's a pretty big accusation to make. The U.S. government is actively supplying weapons to the Mexican cartels. And this guy just, he's, oh, no big deal.
They
No,
understand.
you're a congressman. You're or maybe a senator. They're like, well, somebody should do something about this. You, it's you. It's your you're in charge.
Children are
What is this?
older, very young children are getting what most people consider highly inappropriate sexual contact. What are we doing there to try to make sure we don't have problems with these FBI agents again, or make sure that in the future administrations, they would object if they are asked to behave in such a immoral fashion?
Two things. If you are corrupt, you don't work at the FBI. It's that simple. So we don't tolerate any form of corruption or any deviation from our high standards, whether you're an agent, an intel analyst, or whatnot. And just to show the American public, the resurrection, our applicant pool has doubled month over month every year.
If you guys took the trade, shout out your entries, and also let me know which platform it is on.
The highest point it has ever been. More people want to work at this FBI than ever before in U.S. history.
I'm sure that's because of you, and you're kind of anticipating my next question. I talked to retired FBI agents in my area who sometimes retired in part because they hated the woke, anti-conservative culture at the FBI. And they are concerned, the retiring agents, about new agents, not on your watch, but before this, being corrupted in the universities before they were hired. And they are very worried about what will happen with the new agents. So I think you're answering my question. Do you feel you'll be able to a certain extent solve the problem of inappropriately woke agents filling up the agency in the past? Because now.
All right, just a heads up, 7 minutes until Jerome Powell hits the stage. So we'll shift back over here to the press conference live. This thing will probably take 30 to 45 minutes, depending on how many questions there are in the Q&A portion. Of course, market has found a temporary floor, but of course, until the candles close and until we actually see a push above the previous highs, we don't really have a shift in momentum just yet. All right, so right now we're seeing a beautiful retest right back to the lows of the week. So here's the open of the week. This is the lows. We've retested, hit the fib levels. We've already rejected TP1 and TP2. So keep that in mind. If you guys actually, I believe TP2 hit before it dropped. So we just hit TP1. So if you guys are in this trade, make sure that you are, make sure you're taking that into consideration. How much more does the trade really have? Could it keep going to the upside? Maybe. But everything after TP1 is extra credit. So whatever you have not taken off the table, kind of assume, you know what I'm saying? It's whatever you leave running after TP1, you're kind of risking back to the markets. Okay, so be smart. Don't overstay your welcome. And of course, remember it's the highest impact news day. It's the FOMC rate decision and the press conference. So you are likely to see more volatility than usual. So make sure you guys keep risk management as your highest priority. There's nothing that ruins more traders, and there's nothing that ruins a good trade like over leveraging or having bad risk management, and then you don't get to take advantage of a really good trade. All right.
Now you're gonna have a larger pool to draw from.
Good stuff,
Everybody
Bobby.
that comes to work at the
Bobby already
FBI
put
is
this
allowed
in
to have their
place.
own belief system.
This is
They're not allowed to
crazy.
bring that belief system into the workplace. And anyone that does won't work at the FBI.
Okay, very good. Now, recently, there's another potential scandal, I guess, a politically motivated thing, Arctic frost. Do you want to comment on that? And, it appears one more time as perhaps the FBI was getting involved in
It's gonna hit. So I
what would
maybe
normally be considered political
actually leave it where it's at.
Yeah.
events.
It's just
We are not getting involved in political events, except this one.
Okay. And final thing, with regard to prejudice against Catholics, what happened in the big Hindu temple there in New Jersey? You think, have you ever, has anybody ever apologized?
I haven't heard about this Hindu temple
Catholic
thing. Let me
groups
actually
apologize that
Temple.
temple.
I don't know, sir.
New Jersey.
Okay. Is that something you think would be perhaps a good idea to do in the future?
He's asking the Kash Patel because Kash Patel is Indian. But I think that's a racist question. That's a racist question.
I think
I don't even think Kash Patel is Hindu. I mean, actually, he might be. Can somebody check?
leadership should address it.
Thank you.
Gentlemen, time has expired. Gentleman yields back so we got the gentleman from North Carolina, Mr. Harris.
All right, thank you, Mr. Chairman.
Oh, Kash Patel was raised Hindu. Yeah, bro, he's Gujarati. That's hilarious that he asked him about the temple. He's like, bro, that's actually fucking hilarious.
And thank you, Director
Oh,
Patel,
man.
for your endurance and your perseverance throughout today's hearing and for all you've shared. First of all, let me start by saying that I was very grateful and glad
Yo,
to
does
see
Kash
that-
Patel have a Zin? Dude, I know that. I know for a fact that that was the Zin. You know when you're trying to push it in, he did the tongue thing. Dude, is Kash Patel low-key based?
He's in.
Bro, all right. I'm gonna give him the benefit of the doubt. Let's hear his next bro. Let's hear his next answer. Maybe maybe he says something. Let me give him a chance.
Join the investigation.
Or we just jump to conclusions on this stream and just make wild proclamations about my personal feelings about no. Let's give him a chance, see where it goes. Definitely not gonna say he's incompetent at all. That would just be disrespectful to our FBI director,
Of the tragic and brutal murder of our
He's got cue cards. He's got note cards. I'm not gonna make an Indian racist joke about him being prepared for the test, right? That would be off base and off center. We're not allowing that. Stop laughing in the chat. All right, take that smile. It's not funny. We're not doing that.
Rena Zarutska in Charlotte, which is just right by my district. This woman, as you know, fled the war in Ukraine only to be killed in cold blood by a man who had no business being on the streets whatsoever. This man who had been seen stabbing Irina to death on video had been arrested 14 previous times, served prison time, and was diagnosed with a severe mental illness. In response to the previous offense, the magistrate over his case released him to roam the streets with a $0 bond and a simple written promise to appear in court. Mr. Patel, let me just ask, should judges apply the most lenient bail standards to people with extensive criminal history?
Do they apply the most lenient?
Yeah,
Sorry,
should they apply the most lenient bail standards to people with extensive criminal history?
that has not been my experience. That should not happen.
Is America a place where young women should fear to ride public transit?
No.
And was Irina Zarutska's death, would you say, possibly the result of Democrats' pro-crime policies?
That investigation and matters in open trial. So I don't
Fam,
want.
her body's still warm. Right? Let's stop this, bro. Charlie Kirk's body's still warm. We gotta stop this politicization. And that's how you say it to that congressman earlier that was tripping over her words. Like, we stop politicizing the death of innocent people because there's crazies out there. Open up the mental asylums again. Fixed. That's all I'm saying.
Stylize the evidence.
I understand. Well, Mr. Patel, let me just say, taking over the FBI after the Biden administration's blatant weaponization of the agency is no easy feat.
All right, let's shift over here to the Federal Reserve press conference. Let's get this up on the big screen here. Jerome Powell is about to hit the stage and explain the FOMC's decision to cut 25 basis points from the Fed funds rate. This is a highly anticipated decision that we've been waiting for all year. We were promised 2, potentially 3 rate cuts this year. And between Jerome Powell and Trump's latest beef, this is going to be one of the more anticipated press conferences. So without further ado, let's get Jerome Powell take the stage.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the
Take a shot every time he says dual mandate.
American people. While the unemployment rate remains low, it has edged up. Job gains have slowed and downside risks to employment have risen. At the same time, inflation has risen recently and remains somewhat elevated. In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by 1/4 percentage point. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that growth of economic activity has moderated. GDP rose at a pace of around 1.5% in the first half of the year, down from 2.5% last year. The moderation in growth largely reflects a slowdown in consumer spending. In contrast, business investment in equipment and intangibles has picked up from last year's pace. Activity in the housing sector remains weak. In our summary of economic projections, the median participant projects GDP to rise 1.6% this year and 1.8% next year, a touch stronger than projected in June. In the labor market, the unemployment rate edged up to 4.3% in August, but remains little changed over the past year at a relatively low level. Payroll job gains have slowed significantly to a pace of just 29,000 per month over the past 3 months.
So then why are you cutting rates if everything is dandy? Is it because you're caving to political pressure from Trump?
Due to lower immigration and lower labor force participation. Even so, labor demand has softened, and the recent pace of job creation appears to be running below the break-even rate needed to hold the unemployment rate constant. In addition, wage growth has continued to moderate while still outpacing inflation. Overall, the market slowing in both the supply of and demand for workers is unusual. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. In our SEP, the median projection for the unemployment rate is 4.5% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.7% over the 12 months ending in August, and that, excluding the volatile food and energy categories, core PCE prices rose 2.9%. These readings are higher than earlier in the year as inflation for goods has picked up. In contrast, disinflation appears to be continuing for services. Near-term measures of inflation expectations have moved up on balance over the course of this year on news about tariffs, as reflected in both market and survey-based measures. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation is 3.0% this year and falls to 2.6% in 2026 and to 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to lower the target range for the federal funds rate by 1/4 percentage point to 4 to 4.25%, and to continue reducing the size of our balance sheet. Changes to government policies continue to evolve, and their effects on the economy remain. Higher tariffs have begun to push up prices in some categories of goods, but their overall effects on economic activity and inflation remain to be seen. A reasonable base case is that the effects on inflation will be relatively short-lived, a one-time shift in the price level. But it is also possible that the inflationary effects could instead be more persistent, and that is a risk to be assessed and managed.
I'm going to take a chance on longs here. Oh, let's see if oh, whoa. So let's see. It's going to be pretty low risk. We got a pretty decent entry over here, so let's see if we get this push to the upside. All right.
Our obligation is to ensure that a one-time increase in the price level does not become an ongoing inflation problem. In the near term, risks to inflation are tilted to the upside and risks to employment to the downside, a challenging situation. When our goals are in tension like this, our framework calls for us to balance both sides of our dual mandate. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. With today's decision, we remain well positioned to respond in a timely way to potential economic developments. We will continue to determine the appropriate stance of monetary policy based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.6% at the end of this year, 3.4% at the end of 2026, and 3.1% at the end of 2027. This path is 1/4 percentage point lower than projected in June. As is always the case, these individual forecasts are subject to uncertainty, and they're not a committee plan or decision. Policy.
All right, we're getting to the Q&A portion here. Let's go.
Chris Rugaber at Associated Press. As you know, Fed Governor Stephen Myron has kept his position at the White House, even as he's joined the Fed board. This is the first time, I believe, the Fed's board has had someone with executive branch ties in decades. Does this compromise the Fed's independence from day-to-day politics? And relatedly, how can you maintain the public's perception the Fed is politically independent with this dynamic? Thank you.
So we did welcome a new committee member today, as we always do, and the committee remains united in pursuing our dual mandate goals. We're strongly committed to maintaining our independence, and beyond that, I really don't have anything to share.
Just a quick follow-up. I'm sorry. Can you and other Fed officials have spoken extensively about the impact of tariffs on inflation, although perhaps with many companies appearing to eat the tariffs, and tariffs may be impacting the labor market and other parts of the economy instead. Do you see that as a possible outcome here, that tariffs are the reason we're seeing some slowing, particularly in the labor market, rather than in inflation?
It's certainly possible. We're beginning to see, we have begun to see goods prices showing through into higher inflation. And actually the increase in goods prices accounts for most of the increase in inflation, or perhaps all of the increase in inflation over the course of this year. Those are not very large effects at this point. And we do expect them to continue to build over the course of the rest of the year and into next year. And, it's also possible that there may be effects on employment, but that I would say if you're looking at why employment is doing what it's doing, that's much more about the change in immigration. So the supply of workers has obviously come way down. There's very little growth, if any, in the supply of workers. And at the same time, demand for workers is also.
Not right now. I mean, you could. It's back at the 88.6. So now that it's retraced back down, you have a potential, but that's up to you. Because we kind of already hit TP1 and start to come back down. So I would probably go a little bit lighter risk personally.
And coming down a little more sharply because we now see the unemployment rate edging up.
Nick Timrose of the Wall Street Journal. Chair Powell, do economic conditions and the balance of risks no longer warrant a restrictive policy setting?
Oof.
So I don't think we can say that. But what we can say is this, that over the course of this year, we've kept our policy at a restrictive level, and people have different views, but a clearly restrictive level, I would say. So, and we were able to do that over the course of this year because the labor market was in very solid condition with strong job creation and all those things. I think if you go back to April and now look at the revised job creation numbers for May, June, July, and August, you can I can no longer say that. So what that means is that the risks were clearly tilted toward inflation. I would say they're moving toward equality. Maybe they're not quite out of equality. We don't need to know that, but we do know that they've moved meaningfully toward greater equality, the risks between the two goals. And that suggests that we should be moving in the direction of neutral. And that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted? And how seriously was that
He's going to say unemployment rate going up.
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years. And you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so
he's changed his tune. Now he's saying that the tariffs aren't going to, cause Armageddon. So a bit of a change of tune. I don't really like how this market's looking, if I'll be honest, but still technically holding above the lows, but it's not looking too hot. I might look to de-risk, probably close 2 of my contracts here.
Already in place. I guess I'm just, trying to square the shift in the rate forecast and the
in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit, and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market. You've seen, we were looking at 150,000 jobs a month at the time of the last meeting, and now we see the revisions and we see the new numbers. And I don't want to put too much emphasis on payroll job creation, but it's just one of the things that suggests that the labor market is really cooling off. And that tells you that it's time to take that into account in our policy.
The SEP, once again, the median participant has inflation higher than previously expected by the end of next year, and the Fed not getting back to the 2% target until 2028.
That's the moment of truth. If we start breaking below this double bottom here, and then we don't reject back to the upside, then this thing is gone. So I'm going to give this thing, another few minutes, see how it plays out.
We need to remain fully committed to restoring 2% inflation on a sustained basis, and we will do that. At the same time, we've got to weigh the risks to the two goals. And I would say since April, to me, the risks of higher and more persistent inflation have probably become a little less. And that's partly because the labor market has softened, GDP growth has slowed. So I would just say that the risks there have been less than one might think. And in terms of the labor market, what we're seeing is unemployment is still low, it's still a relatively low rate, but we're seeing downside risks.
Michael McKee from Bloomberg Radio and Television. I'm a little confused by your explanation of the Fed cutting rates because of unemployment. If you think that most of what's happening in the employment area is related to immigration, which your rate cuts wouldn't address, how do you see that as more important than inflation, which has remained almost a full percentage point above your target?
Well, I was saying that what's happening in the labor market has more to do with immigration than it has to do with tariffs. That was the question I was answering. So I wouldn't say that all of what's happening in the labor market is due to tariffs. I mean, you clearly have a slowing in it due to immigration. You clearly have a slowing in demand, which is now perhaps more than that in supply. And we know that because the unemployment rate has ticked up. So that's what I meant by that.
We can follow up. Every year since 2015, the SEP has forecast that you would hit your target 2 years later. And this year, this SEP says you're going to hit your target 2 years later. 2% does not seem to be in sight. Does that suggest that the 2% target is not really achievable? And does this present any credibility problem?
We just broke below the lows. So, you know, we're coming up on SL here pretty soon. So we may get a rejection back up, but like I said, short term, market may look to shake out buyers, and then probably tomorrow or later in the week, we may get the buys that we're looking for. So make sure you guys keep risk management top priority. That way you save your ammo in case there's a better move at a lower price.
That's all that is. You know, no one really knows where the economy will be in 3 years, but the nature of the exercise is to write down policy that you believe would return to the 2% goal over the exercise.
Yeah, I'm out. I'm out. But,
Thanks so much, Elizabeth Schulze with ABC News. The latest inflation report shows that prices are still going up across key categories for many households, including groceries. What will the Fed do if prices pick up more?
So our expectation, and you can see this consistently through the year, has been that inflation will move up this year, but that the basically because of the effects on goods prices from tariffs, but that those will turn out to be a one-time price increase as opposed to creating an inflationary process. That's been our forecast. Pretty much all the individual forecasts say that. We can't just assume that though, right? We have to. Our job is literally to make sure that that is what happens, and we will do that job. Right now, the situation we're in is that we see inflation. We continue to expect it to move up, maybe not as high as we would have expected it to move up a few months ago. The pass through of the tariffs into inflation has been slower and smaller. The labor market has softened, so the case for there being a persistent inflation outbreak is less.
There's a potential here that the market rejects all the way back up. And so I might try for one more. Yeah, I'm going to try for a long position here. I'm going to put my stops right below the, you know what? Actually, I'm going to stick to my original instinct, which is to wait for a clear rejection and then catch the retest. So after losing that first trade, what I'm going to do is I'm just going to wait for the market to reject. If there is a massive wick, then we potentially will get a retest back to our buy zone, and then I will take the re-entry if it presents itself.
Toward inflation for a long time, really. Now we see that there's downside risk clearly in the labor market policy.
Concerned are you about the slowdown in the jobs market for households at home, especially younger Americans struggling to land a job?
So it's an interesting labor market. Probably will be better for the labor market. You see people who are sort of more at the margins. So kids coming out of college and younger people, minorities are having a hard time finding jobs. The overall job finding rate is very, very low. However, the layoff rate is also very low. So you've got a low firing, low hiring environment. And the concern is that if you start to see layoffs, the people who are laid off there won't be a lot of hiring going on. So that could very quickly flow into higher unemployment. In a healthier economy, healthier labor market, there would be jobs for those people. But now the hiring rate is very, very low. So that's been a growing concern over the last few months. And it's one of the reasons why we think it's appropriate that we begin to shift our policy focus toward a more balanced one.
Steve. So in the long term, everything he's saying is bullish. Like we're shifting into a new environment of cutting rates, which is very optimistic for the stock markets. But maybe not today, but in the next 2-3 weeks, months, we're definitely going to start to see that trend pick back up to the upside.
Recalibration. Are we meeting to meeting, data point by data point? Are we in the process here of getting back to neutral? Thank you.
So I think we're in a meeting by meeting situation. We're going to be looking at the data. Let me say a word about the SEP really here. So we often point this out. What the SEP is, it's an accumulation of the individual projections of 19 people, showing what they believe at a particular moment in time to be the most likely path for the economy and thus the appropriate path for monetary policy as well. And as you know, we don't debate or try to agree on what that is. We just write them down and accumulate them. We do sometimes discuss them. And so we always say we're not on a preset path, and we really mean that. The actual decisions we make are going to be based on the incoming data, the evolving outlook, and the balance of risks at the time the decisions are actually made. So you will have seen that we have 10 participants out of 19 who wrote down 2 or more cuts for the remainder of the year, and 9 who wrote down fewer than, in fact, in a good number of cases, no more cuts. So rather than looking at this as certainty, I would encourage people, as always, to look at the SEP as through the lens of probability. And so there are different possible outcomes and likelihoods rather than this one is certain and this one isn't happening. So that's what I would say.
Thank you for getting to my follow-up question, which was, is the dispersion in the outlook a sign of uncertainty of policy in the meetings to come? Thank you.
It is such an unusual situation. Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you've got to be careful about inflation. So we have that means, and so it's quite a difficult situation for policymakers. And it's not at all surprising to me that you have a range of views. It's not so much about having different views for the path of the economy, but it's partly that, but it's also partly about what's the right thing to do in light of the tension between the two goals. How do you weight them? How worried are you about one versus the other? And so it's natural. I think it would actually be surprising if you didn't have a pretty wide range of views based, in this kind of highly unusual situation, and we do. So, but we get together, we discuss. We have a great discussion, and then we decide what to do and we act. But
you guys see why I said whatever you didn't take at TP1, consider it up to the market, because you'll usually get that TP1 rejection, but after that, it's all extra credit. If the market's going to reject, that's where it's going to happen from. So even if you're wrong about the direction, you can still make money. And that's why, this should be another reminder of the partial profits and the TP1s and why they're so crucial.
Intentions are with the Fed. What would you point to as the things they should be watching to determine that the Fed is still making decisions based on, the economic outlook rather than political considerations?
Look, it's deeply in our culture to do our work based on the incoming data and never consider anything else. That's just everybody who's at the Fed really feels strongly about that way. So you'll know it by the way we talk about what we're doing, by the speeches that people give, by the decisions that we make. You'll know that we're just still going to do that. That's all we do. And we don't frame these questions at all or see them in terms of political outcomes. I think when you get to another part of Washington, everything is seen through the lens of, does it help or hurt this political party, this politician? That's the framework. And I think people find it hard to believe that that is not at all the way we think about things at the Fed. We're taking a longer perspective. We're trying to, serve the American people as best we can. So I think you would be able to tell. I don't believe
Guys, everybody, remember, be grateful every morning. Say the Pledge of Allegiance to Jerome Powell for printing $12 trillion during COVID, putting us in so much debt and inflating the currency to the point where we're going to have to, number one, pay back all of this enormous amount of debt through high taxes later. And also the currency is now valued way less. And so everything has become more expensive. So thank you so much, Jerome Powell. We are eternally grateful. How could I have forgotten that?
Thanks, Mr. Chairman. Edward Lawrence from Fox Business. So we saw the preliminary benchmark revisions down 911,000. The revisions for June were the first negative revisions we've seen since December of 2020. How can the Fed base important decisions on rate and what to do with the interest rates on data that seems to be, as you've called it in the past, noisy?
So on the QCEW, the revision that we saw was almost exactly what we expected. It was amazing how close the expectation was. So, and the reason for that is for the last bunch of quarters,
what is going on?
There's been almost a predictable overcount. And I think the Bureau of Labor Statistics really does understand this, and they're working hard to fix it. It's got to do, of course, it has something to do with low response rates, but it's also got to do with what's called the birth death model, because a good amount of job creation happens around new companies and how many go out of business, how many are founded. And it's just really hard. You can't survey for that. You've got to have a model that predicts that. And it's quite difficult to do, especially when the economy is undergoing big changes. So, and they've
it's your job
making progress on it. But the data we get is still good enough for us to do our work. To the extent we have issues around data right now, it's about low response rates. That's happened all over really. Response rates are just lower to surveys now, both in and out of the government. And it's no great secret. We want higher response rates, and we need those to have, less volatile data.
Or stop using surveys and look at actual real-time data from institutions giving you, consumer bank reports, spending data. You're going to survey like 100 companies and sort of extrapolate that as somehow that's, indicative of the whole picture. No, all the survey data are completely useless. Only the real data releases are worthwhile. It looks like we're getting a rejection here. This is kind of annoying. I'll be honest. I'm still going to wait for the lower level. And then if we do end up getting a big wick to the upside, then what I'll do is wait for a retest and then just catch a re-entry for buys. But yeah, markets, it looks like buyers are kind of stepping back in, but I'm going to be patient here. See what other questions.
Line related to where the interest rates should be. Should there have been a cut earlier?
We have to live life looking through the windshield rather than the rearview mirror, as you know. And all I can tell you is we see where we are now, and we take appropriate action, and we took that appropriate action today.
Thanks. Howard Schneider with Reuters. As you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening.
Right.
A black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I hadn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that
NASDAQ is so rude.
Like that. I did mention that, you see minorities, unemployment going up. You see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll.
So this is what I'm talking about. So if I chose to close, but I had to accept this thing could fly and I wouldn't be in the trade. And so that's a choice I made at the time. You know what I'm saying? We got to accept that choice. So if there's a retest, I'll potentially catch the retest back at that same level I entered from, which was probably, let me see here. Get this fib back out here. Wow, that's so rude. This thing dropped all the way down to the 1.17 extension. Oh, man. So, yeah, ideally the retest would be at 24,090. This is on the Pepperstone CFD chart, I'm pretty sure. So if you guys are trading futures, it'll basically be about 40 points lower than where we currently are right now. So whatever your current price is on the broker or platform you're trading on, you would just look 40 points lower. And that's where the expected re-entry would be.
Through the AI build out and corporate investment. I don't know how long that will go on. No one does. In terms of spending, you saw that the consumer spending numbers were well above expectations, and that may well be skewed toward higher earning consumers. There's a lot of anecdotal evidence to suggest that. Nonetheless, it's spending.
Yeah, this thing might just fly from here. This sucks. Let's hope that we get a retest. But damn.
For this year, maybe a little better. Forecasts have been coming up, as you can see. So labor market unemployment is low, but downside risks, but it's still a low unemployment rate. So that's how we see it.
Hi, Stephanie Rule, MSNBC. Treasury Secretary Scott Bessent has said that the Federal Reserve suffers from mission creep and institutional bloat. He's now calling for an independent review. Would you support an independent review, or are you open to any sort of reform in any areas of the Fed?
I, of course, am not going to comment on anything the Secretary says or really any other officer says. So in terms of reform at the Fed, we just went through a lengthy and I think very successful process of updating our monetary policy framework.
He's trying to avoid any sort of external review because everyone's going to realize that they're just making money out of thin air and the whole thing's a fraud.
Federal Reserve Bank system, Federal Reserve System, and at the board, are they the right size? We're actually going through a 10% headcount reduction through the whole Fed, including the board and all the reserve banks.
It's like watching Kash Patel try to answer questions. She asked you if you would be open to an external review. He's like, well, here's all the good stuff we're doing.
So we will have had zero job growth for more than a decade. When we'll probably do.
NASDAQ is flying. The pain.
Open to constructive criticism and ways to do our jobs better.
Not an independent review?
We're certainly open to always trying to do better.
Yeah, she said, are you not open for an external review? He said, we're always hoping to do better.
On whether AI is already starting to affect the labor market
Oh
in
my
terms of lower
God.
labor demand, higher productivity by contrast. Do you buy that? And if that is true, does that have implications for the monetary policy setting?
Well, there's great uncertainty around that. I think my view, which is also a bit of a guess, but widely shared, I think, is that you are seeing some effects, but it's not the main thing driving it. And so the particular focus on young people coming out of college. And yeah, there may be something there. It may be that companies or other institutions that have been hiring younger people right out of college
this thing might go and create new highs. All right, this is a little frustrating, but hopefully we get one more pullback down here. It's going to be like a 90-point pullback, which is still possible. And so I might entertain a re-entry if we see that. But at this rate, we have another couple of days in the week. So there's a lot of opportunities shaping up, and especially leading into next weekend. No rush. Take a trade.
You can take goods, just sort of the broad goods category. And last year, goods inflation was negative. If you go back 25 years, that was the typical thing, was that goods inflation was goods prices generally went down, even adjusting for quality. So that was not the case during the pandemic, of course. Goods inflation went very high, but we had essentially returned to zero or slightly negative inflation. Now, I think goods inflation over the course of the past year is 1.2%, which doesn't sound like a lot, but it's a big change. So we think, analysts have different views, but we think it's contributing, 0.3 or 0.4 or something like that to the current core PCE inflation reading, which is 2.9%. So it's contributing.
2.9% is historic lows. Just keep that in mind. He's trying to find any way to take credit away from the administration, which I'm not a fan of at all. But the inflation rate is exceptionally low.
Really,
just like my self-esteem after closing this trade early. If you guys close this trade early and you're feeling the pain, let me know. Put it in the chats. Or don't. Either way, this thing's going to fly without us. Oh, this is trading, people. So I made a choice based on, just to kind of break it down, I made a choice based on risk management. and capital management, which is I'm going to take a small loss on this. I'm just going to take the hit, even though I re-entered and sort of like, you know what I'm saying? And I knew that there was the risk that I close this thing and then it flies. So I didn't make that decision because I didn't think it was going to keep, you know, it was going to come back up. I made the choice because in case it didn't, I didn't want to be in this trade. Right. And I had to accept before this thing even started flying that this was a possibility and sort of brace for impact. Otherwise, you could be susceptible to FOMO. You could be susceptible to like that regret. And that's where most of the rule breaking kind of starts is, damn, I should have done this. Damn, I should have held it. I should have entered again. I shouldn't have closed it, whatever. And then you sort of try to compensate for that mistake by making more mistakes. And so you know what I'm saying? Just understand if it probably will fly. That's okay. No, it literally will fly. And so the best option is let the market reset once, you know, once this thing kind of finds some resistance, we start consolidating, the market resets the cycle, then we're able to find some new opportunities. But chasing it, never an option. That's why it's one of the rules. Did I make some amateur mistakes? Probably, because I even said higher volatility on news days. You can expect the market to sort of blow through certain levels and be more aggressive than usual, which is exactly what happened here. We hit a Model 2 instead of a Model 1. And yeah, that's what risk management is for. So right now, I'm not going to chase this thing at all. I'm going to wait for the market to reset. If we do get a pullback, what I'm going to do actually is set an alert here. Because by the time I'm off the charts, I want to make sure that if there is another opportunity, I will, you know, I can kind of take advantage. All right. So the smart way to do it, let the market come to you. Let's get back to Jerome Powell.
Make really strong arguments based on the data and one's understanding of the economy. That's really all that matters. And that's how it's going to work. And I think that is the way the institution, that's in the DNA of the institution. That's not going to change.
And then I wanted to ask about a Gallup poll that showed that Americans now have more confidence in the president than the Federal Reserve when it comes to doing what's right for the economy. Why do you think that is? And what's your response? What's your message to the public?
Our response is we're going to do everything we can to use our tools to achieve the goals that Congress has given us. And we're not going to get distracted by anything. So I think that's what we're going to do. We're just going to keep doing our jobs.
This is going to get ugly, dude. I hope this press conference ends soon, man. I'm trying to get off the charts. I might have just closed the charts.
Times.
Pain.
Given the range of views expressed prior to the meeting, I think there was a lot less dissent today than a lot of people expected. It'd be good to know just what you think the drivers were of coming to that very strong consensus in the meeting, and also on the flip side to just explain why the dot plots are really so scattered between, you know, someone even expecting rates to end up higher by the end of the year to 5 cuts. I mean, what were the kind of range of views you heard about on one side, why there was so much support for a cut today, and on the flip side, why there's so much divergence about what comes next?
That's the big question.
A wide assessment that the situation has changed with respect to the labor market. Whereas we could still say, and did say in July, at the time of the July meeting, that the labor market was in solid condition, and we could point to 150,000 jobs per month and many other things. I think that the new data that we've had, and it's not just payrolls, it's other things as well, suggests that there really is meaningful downside risk. I said there was downside risk then, but I think that downside risk is clearly more downside risk. So I think that's broadly accepted. And so that meant different things for different people. Some wrote down, almost everyone wrote down, supported this cut, and some supported more cuts and some didn't, as you will see from the dot plot. So that's just the way it is. I mean, people have, you have people who take this work very seriously, think about it all the time, do their work, discuss it with our colleagues. You know, we endlessly discuss this between ourselves.
No retest, no entry.
And then we have a meeting where we put it all out on the table, and this is what you get. And you're right, there's a range of views in the dots, and I think that's, like I said, very unsurprising given the quite unusual, historically unusual nature of the challenges that we face. But let's remember though, the unemployment rate's 4.3%. The economy's growing at 1.5%. So it's not a bad economy or anything like that. We've seen much more challenging economic times, but from a policy standpoint, the standpoint of what we're trying to accomplish, it's challenging to know what to do.
Look, he should have just stuck to his original narrative that really the tariffs and the immigration kind of strain on the supply side of the economy is going to be transitory. It's temporary. We will see some short-term shocks, but that hasn't happened. And so they're still in this uncertain point where they don't know if this is going to actually work, this experiment of using tariffs, etc. And it actually might. And so the original story was a little bit more concise.
At the meeting and acted with a high.
And yes, I see NASDAQ flying, and yes, the pain is real. But it's better to miss the trade than to chase it. If you chase it, you might have some short-term success, but if you overstay your welcome, it could get ugly. So be patient, and if you are, you will be rewarded with a better entry.
So there are many different ways to calculate it. There's a range of view, but
let's get back live.
It's clearly come way down. You could say it's somewhere between 0 and 50,000, and you'd be right or wrong. I mean, there's just many different ways to do it. So wherever it was, 150,000, 200,000 a few months ago, it's come down quite significantly, and that's because a very lower amount of people are joining the labor force. The labor force really not growing much at this point, and that's a lot of where the supply of labor was coming from over the last 2 or 3 years. So we're not getting that now. We've got much lower demand. It's interesting that supply and demand have really come down together so far, except now we do have unemployment ticking up outside, just one tick outside of the range where it's been for a year. 4.3% is still a low level, but I think this speedy decline in both supply and demand has certainly gotten everyone's attention.
Well, if I may, you mentioned the downside risk to employment a fair amount, but it's striking that measures of kind of activity and output for the third quarter, those that we have, seem pretty strong. The Atlanta Fed's GDP now is very strong. You mentioned strong PCE numbers as well. How do you square those things? Is there a chance actually could be upside risk to the labor market if those activity measures are right?
Well, that would be great. We'd love that to happen. So I don't know that you see a big tension there, but it's gratifying to see that economic activity is holding in. And it's a good bit from consumption. Wow. It looks like consumption was stronger than expected. What we got earlier this week, I guess. And also we're getting
this is really interesting. I haven't looked at this in a while. The JOLTS kind of shows the job openings, the total job openings and losses. Adjusted, and you guys can see like pre-COVID we were sitting at about 6 million open jobs in the economy. A lot of new jobs got created kind of leading up to post-COVID 2022. We had 12 million open jobs that weren't filled, and then since 2022 we've seen a decline, and then since Trump has taken office it's actually flattened out. So really there was a massive decline in open jobs up until Trump took office, and now I think they're saying they want to create jobs. We have 8 million open jobs. I don't think we need to create jobs. We got to find people to fill those. I don't know how creating like 2 million new jobs is somehow going to, increase the productivity, because no one's filling these jobs.
I'm wondering how concerned you are that current rate levels are exacerbating housing affordability issues and potentially hindering household formation and wealth.
This is inside joke for members. You guys can see the low here. This is an 88.6 double bottom forming. So this is 88%, big wedge for the upside. So this is interesting stuff here.
Accumulation for a segment of the population?
Housing is an interest-sensitive activity. So it's at the very center of monetary policy.
I'm not taking
when the pandemic hit and we cut rates to 0, the housing companies were incredibly grateful, and it was really, they said that was the only thing that kept them going, was that we cut so aggressively and provided credit and things like that. And they were able to finance because we did that. The other side of that is when inflation gets high and we raise rates, and you're right, it does burden the housing industry. And so rates have come down a bit. And as that happens, we don't set mortgage rates, but our policy rate changes do tend to affect mortgage rates. And that has been happening. And that'll of course raise demand. Lower borrowing rates for builders will help, builders will help supply. And so some of that should happen. I think most analysts think that it would have to be pretty big changes for.
Yeah, the change is you have to lower the rate because then people can borrow money for cheaper. What do you?
To matter a lot.
Somebody ought to look into this. You're in charge.
For the big changes in rates to matter a lot for the housing sector. And the other thing is by achieving maximum employment and price stability, that's a strong economy. That's a good economy for housing. And then the last thing I'll say is, there's a deeper problem here. There's not a cyclical problem that the Fed can address, and that just is a pretty much nationwide housing shortage. Or a lot of places in the country just don't have enough housing
because BlackRock bought all of them.
The areas around metropolitan areas like Washington, for example, are very built up, and so you're having to build farther and farther out, and so that's where it is.
And just a quick follow-up, during the last SE.
Places like DC don't have a housing shortage. It's a limited amount of space. You have to keep building out because you built in all the land. It's full. There's no housing. What?
Forecasting is very difficult even in placid times. And as I've mentioned before, forecasters are a humble lot with much to be humble about. So I think right now is a particularly challenging time, even more uncertain than usual. And so I don't know any forecaster anywhere, really. Ask any of the forecasters whether they have great confidence in their forecast.
I do.
Honestly say no.
110% unequivocally yes. I'm stating this for the record. I do have a lot of confidence in my forecast, and they've been pretty spot on, if we're going to be honest. So let me get a press pass. I'll ask them the real questions. They would kick me out I would never be invited. I'll get one shot, one-stop shop, and it'll be worth it. I'd put on for the team. I would make us proud.
We're still in an abundant reserves condition, and we've said that we would stop somewhat above somewhat above an ample reserves level. That's what we are. And we're
ample reserves, meaning they have a money printer, so it's unlimited money. That's their reserves.
Significant macroeconomic effects. These are pretty small numbers moving around inside a giant economy. The level of runoff is not very large. So I wouldn't attribute macroeconomic consequences to that at this point.
$500 billion in reverse repo, and you're telling me that's an inconsequential amount of money flowing through a small ecosystem? The $12 trillion Forex market, it's a small ecosystem?
Moderate long-term.
What are you talking about?
Understand that when we see the 10-year treasury moving, and how do you think about this part of the mandate when policy choices like rate cuts or balance sheet reductions affect the long end of the yield curve?
So we always think of it as the dual mandate, maximum employment and price stability for a long time, because we think moderate long-term interest rates are something that will result from stable inflation, low and stable inflation, and maximum employment. So we haven't thought about that for a very long time as a third mandate that requires independent action. So that's where that is. And there's no thought of, as far as I'm concerned, there's no thought of considering that, considering that we somehow incorporate that in as something in a different way.
Thanks, Chair Powell. Matt Egan from CNN.
He's so good at saying
We have recently learned that average FICO credit scores are down this year by 2 points, the most since 2009 during the Great Recession, and delinquencies are high for car loans, personal loans, credit cards.
Finally.
How concerned, if at all, are you about the health of consumer finances, and do you expect the day's cut will help?
No.
So, we're aware of that. I think default rates have been kind of ticking up, and we do watch that. They're not at a level, I don't believe they're at a level where overall they're terribly concerning, but it is something that we watch. Lower rates should support economic activity. I don't know that one rate cut will have, a visible effect on that, but over time, a strong economy with a strong labor market what we're aiming for, and stable prices. So that should help.
Just to follow up, this rate cut is coming at a time when the stock market is at or near all-time highs and some valuation metrics are elevated historically. Is there a risk that cutting rates could overheat financial markets, potentially fueling a bubble?
You know, we're tightly focused on our goals, right? And our goals are maximum employment and price stability. And so we take the actions that we take with an eye on those goals. Separately, and that's why we did what we did today. Separately, we monitor financial stability very, very carefully. And, you know, I would say it's a mixed picture, but households are in good shape. Banks are in good shape. Overall, households are still in good shape in the aggregate. And I know that people at the lower end of the income spectrum are under pressure, obviously. But from a financial stability perspective, we monitor that picture. We don't have a view that there's a right or wrong level of asset prices for any particular financial asset, but we monitor the whole picture, really looking for structural vulnerabilities. And I would say those are not elevated right now.
Gene, we'll go to you for the last question.
Yeah, they're exactly where they were back in 2020. I mean, slightly higher. And they're actually correct. This is actually the highest rate of delinquencies on credit since the 08 recession. We can kind of see it right here. Interesting. Wow.
Hi, Chair Powell, Jean Young with M&I Market News. I wanted to ask about inflation expectations. You've said the Fed can't take the stability of inflation expectations for granted. You mentioned at the short run, they've gone up a little bit. I wonder if you can talk a bit about that. And then also at the long run, wondering, do you see evidence that the debate over Fed independence and the growing deficit is putting pressure on inflation expectations?
Wow.
So
hit them with the hard one.
as you said, shorter term inflation expectations have tended to respond to near term inflation. So if inflation goes up, inflation expectations will predict that it takes just a little while to get back down. Fortunately, throughout this period, longer term inflation expectations both break even in the markets, and almost all of the longer term surveys, Michigan being a bit of an outlier lately, have been just rock solid in terms of, you know, running at levels that are consistent with 2% inflation over time. So we don't take that for granted. We actually assume that our actions have a real effect on that, and that, you know, we need to, you know, continually show and also discuss our commitment to 2% inflation. And so you'll hear us doing that. But you know, as I mentioned, it's a difficult situation because we have risks that are both affecting the labor market and inflation. Those are our two goals. And so we have to balance those two. When they're both at risk, we have to balance them. And that's really what we're trying to do. Your latter part of your question was about.
I'm trying so hard to keep my commentary to a minimum, guys, but he's so good at saying a lot and saying absolutely nothing. He's like, yeah, we have the two mandates and we're trying to balance them. Like what does that even mean? You're trying to make, like, yes, that's literally the entire game. Trying to balance your two mandates of maximum employment and price stability. She asked you a very specific question. Then he also threw a slight dig at the Michigan Fed president, saying they've been an outlier lately in terms of their data, aka their opinion. Dissent within the Fed is getting real. Yeah.
Independence. I don't see market participants
as usual.
I don't see that's something they're factoring in right now in terms of setting interest rates.
They are. That's why she asked.
Thanks very much.
Huh. He said after that question, he just ran. All right. Okay. There we go. So let me kind of break down what just happened here. We just finished September Fed meeting. We got our first rate cut since 2024. Finally happened, people. In terms of the trade, I did close prematurely. I mean, the market did draw down significantly, and I think one of my probably the biggest regret is not re-entering the trade after it broke back above the weekly low. So now the market's going to probably continue to the upside. As we said, a rate cut is bullish for the stock market. for all risk assets and specifically for NASDAQ, which is very technology sector heavy. So technology stocks, people are usually betting on the future. And so when things are optimistic, when the Fed starts cutting rates, and we just started this new regime, this new cycle of rate cuts over the next probably 2-3 years, technology stocks are probably going to be the biggest winner, maybe crypto, but risk assets, as opposed to, let's say, safe haven assets, gold, cash, bonds. So expect that to kind of be the theme here. It's not going to be a straight line. There may be one more correction here. And so don't get too excited and chase the trend. Instead, wait for the market to pull back as it always does. Look at every time the market is building up, it'll come back for a retracement. It'll come back for a retracement. So don't go chasing the market. Instead, let the market come to you. Now, to kind of break down what Jerome Powell just did, you guys know when you were a senior in high school and you basically like are mentally checked out, right? And so like, yeah, you're showing you're physically there, but you're not mentally there. Jerome Powell's on his last 6 months on the job. He's on his way out. He keeps everything cool, calm, and stable. He gives us a rate cut, maybe another one next month, right? We saw the CME kind of predictions here in the Fed futures market. There's a 75% chance he cuts rates again next month. So he keeps things calm and steady, doesn't go too deep in the beef with the Trump administration. He can glide out of this with a better reputation than Janet Yellen, Ben Bernanke, Alan Greenspan. You could say that besides that whole mistake he made about the whole inflation is transitory kind of thing back in 2021, besides that, he orchestrated the soft landing, the Goldilocks scenario, where he was able to get inflation down without crashing the economy. And yes, it took a little bit of time, but he was patient, took a lot of criticism. If he plays his cards right next 6 months, he gets to be written in the history books as having helped us through COVID, having been the one to basically get us out of the worst economic event of all recorded history, at least in terms of modern markets, let's say the past 100 years. COVID was the first time that the entire world stopped to a halt at zero. Supply and demand went to zero. The price of oil went to zero. It went to negative. Oil futures were trading at negative. They were paying you to take oil. They would deliver barrels to you. Right? So this was the time where, Jerome Powell right now is trying to play it as safe as possible. If we're lucky, we get one more rate cut next month. And so we'll continue to monitor the expectations of the Fed futures market here. And it just seems that that's the direction we're headed. So long story short, we're now in a new cycle with rate cuts from the Fed. The market was excited before. The market was bullish in anticipation of this. But now that we actually finally got it, I think the market is going to go way more, there's going to be way more optimism in the markets, and the market may get way more aggressive. We've been seeing the market just break new highs and all-time highs on a daily and weekly basis. And I don't think that's going to stop anytime soon. All right. We've gotten some good news out of the tariffs over the summer, and the unemployment number is at record lows. The inflation number, we're talking about PCE, is about 2.9, which is pretty low. And then right now, the GDP expectations are sitting at 1.7. I don't buy that. I think we do 2.2, 2.3. I do think that Trump's tariffs will put money in the government's pocket. And I think that being in a surplus for once, having more money than we're spending on a monthly basis, I think that's going to actually add up in the total GDP number. All right. So appreciate you guys for tuning in. Hit like and subscribe. Let me know in the comments what you guys think. If you took this trade, closed early like I did, you want to share your pain, put it in the comments section. Right? This is what pain sounds like, you guys. I'm literally just distracting myself from thinking about the decision I'm going to go look myself in the mirror, in my face, in my eyes, in my face. Say, you did this. This is on you. All right, y'all. Happy and safe trading. Do not chase. Make sure that you guys stick to your plans. I'll catch you guys on the next stream. Happy and safe trading, y'all. Take it easy. Peace.